Hello, hello.
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 How's everyone doing?
Doing great, thank you. How are you?
Pretty well. Although it gets dark at 5 p.m. where I am, which is favorite time of the year.
Yeah, well, soon you can drink wine with cinnamon.
You can drink wine with cinnamon any time of the year.
That's a very good point.
Yeah, so yeah, we can start in a couple of minutes, but let's wait a little bit for more people to join.
Mhm.
Um, and since we had like, during the prep call with Pablo, we discussed that he's in Istanbul. And sorry, this is my
New co-host.
this is my daughter.
Very cute.
Yes. Yeah, she just came back like literally when I started the space. She entered the, the room. But yeah, we were discussing with Pablo that he was in Istanbul for DevConnect. Yeah, it's I heard it's a great event. Everyone was super excited about it, and I kind of remember the excitement that my excitement after ETC. So maybe it would be great to start with these like general comments about yeah, how was that event, and then we can
Yes.
go into introductions and so on.
Yeah, for sure. So DevConnect was great. It was a lot of events, everything from DeFi to L2s to core Ethereum staking. So yeah, for me it was 10 days. Very intense event, but everybody was there. Well, not everybody, but almost everybody was there. Sorry for those who couldn't make it. And yeah, excited to kind of catch up and kind of slowly coming back to reality.
Well, was there anything that really made an impression on you, like in terms of technology or in terms of, I don't know, some project? That would like the biggest, like the highlight for you.
Yeah, I think staking is getting really mature. Like we saw a lot of home stakers and more people, both professional and smaller, coming online to stake more and more. DBT was a big topic on the staking space and how to build resiliency and setups and new possibilities with liquid staking. And the other thing I saw a lot was zero knowledge. So there's a lot of excitement on the possibilities to scale with zero knowledge, to implement privacy. So yeah, I think it's going to be a big topic this year.
Nice. Yeah, decentralized staking sounds very interesting. So I'm looking forward for you to share more on that.
Mm-hmm.
Um, I kind of feel that because I today I was part of a discussion related to uh, Bitcoin mining centralization and a miner basically um, kind of applying the OFAC sanctions. And then the discussion went into Ethereum nodes that basically 50 plus percent of all nodes are either on AWS or some other network. I think OVH was the other one. So uh, I kind of feel that most people in the space they just like number go up and not that much of decentralization, but
Mm-hmm.
hopefully yeah, this is not the case, and there are still like people that are interested and really fight for it because I think there will be a fight. But yeah, I think maybe no need to go that deep with the
Mm-hmm.
start at the start.
Sure, we can get into it later.
Yeah. So great. Yes, Darren.
So your daughter comes in to break the tension, and then you just start us off really dark. It's a very, very good tactic.
Yeah. Well, you can say something more positive, having in mind that you're the cook today. Thanksgiving. I think it's yeah, it's a good
I
occasion
am
to be giving thanks.
literally in my kitchen right now preparing pumpkin pie while we're on the Hangout. So just kind of a keeping the American spirit. So also nice to meet you, Pablo. So I'm one of the co-founders of IPOR Labs, and I'll be a bit of the
Hmm.
MC. And maybe we can start out with a little bit of your background. Who are you? How did you make it to the space?
Cool, sure. So I'm an entrepreneur. I've been in different sectors from software as a service to mobile to initially a crypto holder. I lost all my Bitcoin, famously in empty box. So I'm still waiting for somebody to pay out that. But I rage quit the sector and I came back a few years ago to Ethereum, and I was really impressed with all the new capabilities of DeFi. But that was still very reflexive, right? Like everything was kind of take yield from one place and make up a number and put it in another place. But when staking came along, that was really fascinating because in staking, you have all this revenue from users basically paying to use Ethereum. And yeah, each one has their own use cases. But I think Ethereum today is like the first positive yield that's sustainable in crypto. And I was really drawn to that. But when I was looking into how that yield is generated, I saw that you always have to trust somebody when you're staking. So you have to like put your ETH somewhere and say you're going to manage this node, and whether that's yourself or somebody else. I realized that there was a lot of trust involved, and that was not a good thing. So I started looking into what are the big people doing, and yeah, I saw that centralized exchanges are like, of course, very centralized, but even protocols are always relying on somebody running those nodes. So yeah, together with a few of my co-founders at Diva, we had this idea of applying distributed validation to remove every element of trust. And today I'm working on Diva Staking. So I'm a contributor. I help with economics, like protocol design, and so on. And the goal of Diva is to provide liquid staking, like you could have with Lido. So you can stake your ETH and get a liquid staking token. But the difference is that you don't have to trust absolutely anybody because the nodes are decentralized, they're distributed, nobody can kind of unilaterally slash or disappear or lose the keys or get hacked because everything is done by consensus. Um, and even elements like oracles, multi-sig, guardians, none of those exist in Diva. So it's kind of a next generation kind of design for staking. And yeah, I've been working on that for the last 2 years. So it's super exciting. Still in testnet, but yeah, hopefully releasing Q1 or Q2 next year.
No, that's really cool. Really, really interesting background. Since we didn't get to meet up before, I used to run BD for one of the we were the number two exchange to empty Gox back in the day, right? And
Amazing.
the whole idea of decentralization, and maybe to kind of chime in on what you were talking about before, is like um, my kind of dark take is that all decentralization maxis that are crypto enthusiasts, their biggest interaction with a blockchain is having a Binance login, right? So, we're kind of trusting decentralized entities, but I like that you guys are embracing the fact that you don't have to. So that's pretty cool.
Yeah, and I think decentralization often is not the goal. Like the goal is really capture resistance or censorship resistance or resiliency. Like what happens if somebody tries to take down everything or revert some of your transactions? And I often think that in Ethereum, we're like kind of this credibly neutral nation that's exporting like security.
Mm-hmm.
And it's like this kind of cloud nation that keeps trading and is very good at that, like some nation states have been historically. But that will only remain this way if we're truly censorship resistant, resilient, and so on. And usually the best way to get there is decentralization. And I mean, we starting to have some really cool technologies like zero knowledge, which can give you really strong guarantees without having to be decentralized. But that's another story. Often the best thing is if you decentralize, everything will be better. So that's a bit what we're working on.
Oh, I mean, it changes the locus of trust. I mean, that's really what you're talking about, right? I mean, even the way that the
Exactly.
a blockchain works is this consensus mechanism where the stakers are agnostic. Their goal is to keep the network pure, right?
Mm-hmm.
So maybe you can give us kind of a like what when we're looking at the Ethereum staking landscape and the LSD landscape, like Obviously, we all know Lido, and actually, IPOR is about to launch a stake rate swap based on the Lido rate because of its, its market position. But how would you characterize some of the different protocols? What are the trade-offs, and where does Diva fit in?
Yeah, so the first thing is when you look at stablecoins, you see that there's kind of this stable triangle where you have three main solutions. It's really important that we have those because in times where, for example, USDC has some issues or USDT have some FUD, you always give, first, you reduce risk by having like more than one option. Second, you give investors a possibility to position however they want. So I think the state of the ecosystem is a bit unnatural at the moment just because Lido has such a head start in the space. And today we see that Lido is about 10 times bigger than the next liquid staking token. But I think that's an unnatural equilibrium and probably will be correcting. So I saw at IPOR you have three stable coins, but at the moment just STETH. But yeah, I'm excited about you guys working towards adding more options because I think the moment that we have two or three, basically we can allocate a lot more efficiently. Treasury managers can think about like all the derivatives they can do with the swaps, the interest rates, the leverage, and so many exciting things. And just everything gets better once you have options. So yeah, I don't know if that answers your question.
Yeah. I mean, so at IPOR, we took kind of it's interesting on the stablecoin side. We looked at the index side, which is kind of creating this index, which represents the behavior of the different stablecoins across multiple protocols. And the idea is everything should converge to the index because it's the index, right? Because it represents what's happening in the market. There becomes arbitrage strategies where you can trade. And arbitrage should close these gaps, right? On the stake rate side, we took the opposite route, and it's a little bit because of the nature of how you get the stake rewards, and we've seen some of these kind of macro indices like the Caesar, the CSR, which is very centralized, very TradFi, but there's nowhere you can actually put your ETH to get those yields because obviously it varies beyond on the different set of validators, on which blocks, what are the MEV rewards, the tips, the gas activity, between the different validators. So this is kind of why we took that route, and we're excited to kind of expand this suite. And being kind of the DeFi native side, we're looking at, what are the different kind of liquid staking derivatives, and things like Diva. So, how does Diva differ from Lido or other LSD protocols? I mean, what are some of the key features?
So, great question. Let's see, when you're staking with Lido, what you're basically doing is it's a little bit like a bond. If you think about it, like nobody takes their money and goes to a central bank and says, hey, can I buy some treasuries? And can I buy like 100 positions and average them and so on? That's kind of crazy, but it's also very mechanical. So what platforms like Lido do is they say, okay, I'm going to do all that busy work. All you have to do is give me your ETH and I'll give you a receipt. And every day when I earn rewards, I'm going to give those to you, kind of like a dividend kind of thing. But the way that Lido does this today is they do it with 37 centralized node operators. So these are people that the Lido DAO has chosen, and basically they're completely trusted. Like they're people who they vetted. The problem you have is that when you have such a small number, you could do several things. So if one of them is affected, and by the way, one of them was affected this week, they had some security incident. The way it works is that they are still custodying single keys. So even though they don't hold your ETH, so nobody can steal your ETH, it's still secure, they're still responsible for those keys. And if those keys do something wrong, you could have slashing, you could have downtime penalties, etc. So it's really important to remove these elements of failure. And what Diva does differently is instead of giving it to a few people or to one, like exchanges do, what Diva does is it creates this layer 2 of operators, and these operators are connected to each other, they're talking to each other, and every time you create a validator with 32 ETH, they kind of create these keys in a distributed way. So for those of you who are familiar with Gnosis Safe in a multisig, or with Fireblocks, with MPC, what you do is you have these key shares, these pieces of the key, and if you have one of those alone, you cannot do anything. You need to really get 2/3 or whatever the threshold is from the network. So what Diva does is it continuously generates these key shares. It gives them to different people in the network, and different people come to sign every 12 seconds to generate those rewards. So this is a little bit like an office where imagine there's these 1,000 employees in an office, and anytime somebody's sick or they can't make it, nothing happens because somebody else can fulfill their work, like their job. So in Diva, up to 30% of the network can go down without having any impact. And that means that, for example, if somebody would turn off AWS tomorrow, or there will be a power outage, or there would be like a kind of censorship attack from a government, absolutely nothing would happen as long as it only affects 30% of the nodes. So our goal is to really make it really easy and really inclusive for anybody to run a node. You don't need to run a node to use Diva. This is kind of like the validator side. But if we have enough nodes and they're very decentralized, then Diva should be by far the most resilient option.
That's really cool. And how long have you been working on, on the concept?
So this is a hard problem. It's a hard problem because we try to make it very easy. So if you're a user, you don't need to do anything really. Like you just stake your ETH, you get this magic token, DVETH, that earns rewards, and that's it. But in order to provide such a simple experience without needing to trust anyone, we had to build all this protocol of connecting nodes, of keeping collateral, distributing rewards, applying penalties to somebody who does something wrong. So it's been about 2 years. And kind of, if you're trying to imagine what this looks like, it's a little bit like BitTorrent, where you can turn it on. And as long as you have it on, you're connecting to other nodes in the network and you're performing validation duties. And once you turn it off, you stop doing those duties and, like somebody else takes your position in the network. So it's been about 2 years, still a few more months to go to mainnet, but super excited because this will be the first time that we have something like kind of this magic in validation.
Okay, that's really nice, really cool. Okay, so when is do you have a launch date already set?
It's Q1, Q2. It depends on Ethereum because there's a few improvements in the next fork that Diva would depend on, but we're aiming for Q1, Q2.
Yeah, this is always interesting how the network is changing and how it might actually change some of your implementations, right?
Exactly. So the consensus layer is nearly complete, but there's 2 or 3 details, very technical, which are not there. So if we have them, it will be much better. And we rather wait for those because it just makes risk management so much better.
Okay, cool. And you were talking about basically what we build, on our side is the derivative product off of the staking rate, right? This is very interesting. What's the monetization side on the DeFi protocol? I'm guessing there's some of the yield that's clipped by the protocol, or how does that work?
So that's the interesting part. A lot of protocols are made a little bit like a company that takes a cut of anything you do. And that's not the goal with Diva. With Diva, the goal is this tool which simply connects people running nodes with those who don't. So if you don't run a node, you pay 10%, and that 10% goes to the people who do run nodes. But there's no protocol fee or protocol monetization. There's almost no protocol. It's just a smart contract that kind of keeps collateral and gives the right things to one or the other one. In the end, you can expect to pay 10% fee because you're paying the operators, but not for the protocol. So in terms of performance, for those of you familiar with ST from Lido, it should work exactly the same. There's a rebasing token, there's a non-rebasing token. The fee paid to operators is 10%. But the difference here is you're not paying it to a treasury, you're just paying it to people who are running nodes.
Okay, and then is the yield, it's one common yield across all DeFi participants?
That's right. So you can think about it as this big network where everybody works together and everything they generate goes to stakers and to operators in a smooth way. So that means that when you run a solo node, sometimes you have this lottery ticket effect when you can have a really good period or a really bad period, and it's unpredictable, it's very volatile. But in Diva, because it will be a very big network, the rewards should be extremely smooth and boring, which is the whole point of a product like this.
Yeah, that's nice. I mean, it's so I'm I like to play poker, right? And so the idea of like running something once or twice or multiple times, the idea of reducing variance, right? This is the whole idea
Yeah, exactly.
of Bitcoin staking pools of different staking protocols, so you reduce the variance across the different operators. But we see, okay, so we've been doing some very interesting data things around with the Lido staking rate. And we've also been looking at other protocols, and they have different intraday behavior, and so this is something that's quite interesting. That is actually a tradable commodity, and that's kind of at the core of what IPOR does, right? But how do you see this playing out in Diva? I mean, what's your really I mean, what kind of users are you trying to attract?
Yeah, so we think in the future, like we've seen with Bitcoin mining pools, there's going to be pools, and it's not a question of, oh, do we avoid the pools? I think it's a better economic model because of the smoothing. The question is, how good are those pools? So what we're trying to do is we're trying to build the most trustless and resilient pool where nobody can manipulate that, right? So we're working together, but it's a little bit like Ethereum itself. You don't need to trust anybody. But once you're in that pool, yeah, we're just offering this liquid staking token that anybody can use. I think in the future we'll see treasuries allocated not to one LSD, but probably to three. I think we'll see protocols like IPOR when you have like a balance. Probably you won't put it in one LSD only. When it's inactive, you'll probably like have some kind of like a money market fund underneath, right? Like you'll put it in different ones, and maybe you have some smart algorithm to capture the yield if something's overvalued or undervalued. But I think this is going to get more and more commoditized. And in the end, Diva is just like a convenient and trustless way to run one of these primitives. And again, I don't think it will be like ever 100% Diva. I think these things should coexist. And yeah, if there's differences in yields or variance or anything like that, that means there's also opportunity for traders to arbitrage that, to trade it, and to kind of use it in their strategies.
Okay, nice. And I guess the stack. Do you think it's something that institutional players can plug into? I mean, this is more like on the regulatory side. We just dropped an article yesterday discussing, how, for example, an ETH ETF might shape up or shake up the staking landscape, what it would mean for the yields. Is the ETF provider able to do different things with it? Is it able to, deposit it, into an LSD, or can it just use, basically the core protocol to get the staking yield? I mean, is this have you had any conversations like this on if Diva can be used by institutions?
Yeah, so one of our contributors is a lawyer, and he paid a lot of attention to the details. I feel a lot of people in DeFi don't, and that's a shame because you're kind of making it harder for an institutional to allocate. So what we tried with Diva is to make it as decentralized as Ethereum, and that really matters because when you're investing in something that's managed by a company, you need to say, hey, who's the counterparty? I need to KYC them. I need to like check in which country they are and all these things. But the beauty of making something immutable like Diva is that there's no KYC. You're interacting with Ethereum itself. You're just using a tool to make your life easier. So yeah, I think Diva is going to have a really good design for compliance in that sense. And I think in the future, we're going to see ETFs. Obviously, for Ethereum, it's going to be staked ETH. But I don't think it will stop there, right? It will probably be like maybe different strategies where you can trade with things like interest rates, for example, or volatility or different derivatives. And I think when you look at those ETFs, you're not going to see 100% one asset because that would be crazy. Regulators are going to say, hey, I want you to protect customers. So I want you to put max 30% in this asset or max 20%. So what that does is it kind of forces good practices into the ecosystem, but it also rebalances. So that's why I keep coming back to this thesis of this stable triangle of LSTs that I think is missing today. But yeah, I think it will make the ecosystem much safer.
Okay, very cool. And we also have Costas and Dimi and Wukash up here. I want to give them a chance to ask some questions about Diva as well, and then we can
Mm-hmm.
maybe just talk about the staking ecosystem in general. So, Kostas, Dimi, Wukash, I don't know if you guys have any specific questions.
Yeah, mine is mostly about the ecosystem actually, because Diva kind of became more popular on crypto Twitter with basically vampire attack of Lido, yes, where you basically give those Diva tokens to people that stake their STETH.
Mm-hmm.
But at the same time, we saw yesterday like Blast depositing about 90,000 Ethereum into Lido ST. Obviously, quite controversial, and a lot of the E Foundation members and you know E decentralization maxis instantly jumped on this. So considering what you are seeing right now with like if we have layer two chains, basically multi-sigs that are just depositing the Ethereum from the bridge into Lido, how do you see the overall ecosystem going forward? Have Lido reached like an escape velocity where everything is just going to be aggregated there until there is a giant slash and a lot of people get burned? Or will the basically the ecosystem naturally understand that it's way off balance having so many eggs in one basket and search for the alternatives? And how do you see Diva in trying to compete in this race, basically?
Yeah, great question. So the first thing is maybe to understand how we got here. So the way the staking ecosystem was built is um, there was this first mover advantage that Lido had, and they raised an enormous amount of capital. So I think it was over $100 million. And they incentivized very aggressively liquidity. They made a lot of partners with different protocols, and they managed to do a great launch where it was not constrained by capacity because they're not collateralized. So there was never a limit that they were hitting. This meant that a lot of people, when withdrawals were not there on Ethereum, said, hey, I can't withdraw my ETH, but if I use Lido, I can sell my STETH. And that made it really useful for a very long time. So if you look at the period when Lido grows from 0 to 31%, where we are now, it's mostly before the merge. And after the merge, it kind of keeps this 30% more or less stable because there's no longer a huge reason to stake with them now that withdrawals are enabled. So what you see today actually is that you have more centralized things growing like Figment or Coinbase and other options. However, the problem is that there is a risk on having everything so centralized because today what you could do is you could upgrade the protocol and change the way that you're routing things. And today you can't really eject the validators, but that feature is coming soon. So one thing that could happen once this feature is enabled is that Lido through the DAO, I think their TVL is something in the range of $9 billion. I'm not super. No, it's 18 billion. I think 9 million. Yeah, $18 billion. But the FDV from their DAO is only about 2.5. So what happens is you could pass a vote to steal all that ETH and send it to an arbitrary address, which means that there's an attack possible where you can steal a lot more and get a huge leverage through the DAO. So there's solutions being explored, but that's just one of the issues that could happen when something gets so big. And other issues involve when you have a very high percentage of the network. It's a bit like in Bitcoin mining, that if you get to 50% or 66 or 33, there are different thresholds where you can do different things. You could start affecting the neutrality of the chain. And what that means is, I was saying at the beginning, if the Ethereum nation is exporting security and neutrality, and that gets compromised, the value of Ethereum just drops drastically because if there's one company responsible for it, which can censor transactions or can change and can fork the chain, then yeah, in my opinion, we just lost all the credible neutrality we had, and that's basically the value of Ethereum. So I think the risks are real. They're being underplayed. But the problem is, because it's so big and the incentives are worth it, you keep seeing economic players that launch things that maybe are good in the short term for them, but that compromise the possible value long term of the ecosystem. So I think it's really important to have this conversation of, do we want to preserve value long term? Because if we go slowly eroding that neutrality and losing it behind one single protocol, then Ethereum will be a lot less valuable. So there is hope, however, and I will end my explanation with this. But the hope I have is, a lot of people say, well, liquidity, because liquidity, winner takes all, everything will be STETH. And I don't think that's true, because when you think about diversification, it is valuable to have two things, because then your max risk is only 50%. It is more valuable to have three things. Your max risk is 33%. But once you have more than three, if you have 4, 5, your benefit is much lower, right? So this is hinting that maybe there's an optimum in 3 to 5, but then you will say, yeah, but the liquidity is so valuable that it will go to the winner, right? But there, I also have another thought, which is, it's not like, not everybody needs $1 billion in liquidity. Like, most of your use cases are possible with 100 million of liquidity, or maybe 10 million, or even 1 million. So if you have three protocols that are all of them above 100 million, in the eyes of most use cases, they're all completely equivalent. So I think it's going to take us time to get there. And I think we all need to make the right choices to kind of push this to the natural equilibrium. But I think once this equilibrium is reached, it's going to be stable. And you've seen that with stable coins, or you've seen it with AMMs, where you have like 3 or 4 different AMMs, which most people are routing through. And I think once we get there, it's going to be stable and everything will get better.
Thank you. Thank you for the explanation. I fully agree.
Yeah, I see DeFi mate here is raising hand. So please, sir.
Hi, everyone. I have 2 questions, one to Diva and one to IPOR. First one for Diva. You told you do not have any protocol fees. Is it correct?
Yeah, that's correct.
And can you please explain, like, what's like? I mean, are you just doing a public good, or I mean, is there any way you want to monetize it somehow? I mean, like, okay, public goods is a good thing, but I mean, we all have to eat something. So, as I understand, you have developers and they get paid, for creating Diva. So, what's the idea behind it?
Yeah, that's a great point. So Diva got financed by a round of supporters. We raised a small round, 3.5 million, about a year ago. And this is what was mostly people with large amounts of ETH, or people really involved in the staking ecosystem who wanted something like this to exist. Diva is a little different from every other protocol in the sense that Diva will finish. It's not that it needs to be releasing a new feature every few months and do V2 and V3. Diva, once it launches, will be functional forever, and it will be unstoppable forever. And for those of you who are familiar with Liquidity, you can see what I mean. Liquidity has these systems which, whenever people want them, they will work, and they will work forever, and they will be uncensorable and unstoppable. So in that sense, we don't need as much money as other projects, which need to maybe incentivize liquidity a lot and work for years and years. But we do have the Diva DAO, and we're trying to also involve the Diva DAO, so there is some value in this, like in these actions of aligning stakers and operators. So what we're hoping is that stakers and operators will be able to participate in the Diva DAO by passing votes and be able to regulate parameters like what is the staking fee, what is the operator fee, what are the collateral levels, and key economic parameters. Because in the end, this should be like a cooperative, and it should be the people using it who decide how it works. And yeah, at the moment, the Diva DAO is already existing. There's 4,000 different delegates. There's absolutely no value in the tokens, but I think there is a functional value in this DAO existing. Like, there should be people who feel involved. And what we're hoping is that, that DAO slowly take shape. We don't have a solid plan of what we would like to see there. But instead, like the DAO will be kind of deciding on its own, like what are good functions and how can it contribute to the growth of the protocol.
Okay, thank you. I got it. So basically, like, let's say angel investor just wanted to, to create a public good, and they funded you to make this. It's, it's very nice to hear that this exists. And as I understood, the token doesn't have a governance power, right?
The token only has governance power to govern itself. So it's the token from the DAO, and the protocol, because it will be immutable, it will not be something that the DAO can upgrade. So it cannot change it. But one thing I can envision, and this is not finalized, is that the DAO will be able to signal things like, hey, everybody is being lowering what they pay to operators, so maybe we should pay less. Maybe the DAO can pass votes for that, and the protocol can react by listening to some parameters. So these are just a few ideas, but I think they make sense, right? Because even if the smart contract never changes, the world might change. Like it needs to be able to react within some ranges.
Okay, I got it. Thank you. Thank you very much for your answer. And
You're welcome.
my next question is to IPOR Labs. Now you depositing ETH only to Lido, to stake ETH Lido. Have you considered maybe creating some sort of weighted index? I mean, at least you will not be adding more ETH to Lido, but adding ETH in the same proportion to the biggest staking providers, like Rocket Pool, maybe Frax, maybe Swell, whatever. At least you will keep the same proportions, but not increasing Lido dominance.
Yeah, I mean, actually, this is a big focus for the start of next year, which is onboarding more assets. And the one of the reasons that we went away from an index to start is because the staking ecosystem is not very mature. It's not very diverse right now. But you can build an index with certain allocations to different LSD platforms. If we have the swaps, then we can also mimic on the hedging side those specific rate behaviors, and this becomes a very nice product where you can have a basket of LSDs and also use the swaps to hedge your rate risk. So I think this is definitely something that could be on the roadmap.
I think
And
it will also...
go ahead.
Yeah, thank you. I think it will also increase, like, let's say, popularity. I mean, there are people who don't want to use Lido and they don't want to deposit more assets for Lido. It's still a minority, but there are people who want to diversify the Ethereum staking landfill, and probably you'll be able to attract those people who want to use other LSD products, and they will deposit the staked Ethereum to the IPOR.
Yeah, Pablo, you want to say something?
Oh, no, I thought you were going to reply because it's more a question for IPOR.
It was not a question, just my observation.
Okay.
Yeah, thank you.
Yeah, what I wanted to say is it's really not protocol's fault. Like, I think I really applaud you guys for thinking about working on indexes and on broader market things, because the reality is the ecosystem is not mature enough. Like, we don't have that many options today. And Rocket Pool has a great design, but we need like more volume and more options. And I think some of these are off-chain. Like, you cannot really get exposure to Figment because it's off-chain and there's no liquid staking token. But if we keep bringing things on-chain with really good designs, then it will be easier to replicate this broad market staking index and have like a very smooth one and approximate it with things and like work on all these derivatives. And yeah, I think we're really at the beginning, and that as we keep becoming more sophisticated, all these tools are going to be super important pieces in the ecosystem.
And it also goes with a little bit about, what you mentioned about the development of the ecosystem, like the whole idea of, and also, you know, the idea that people will want to diversify, like it's counterparty risk, or it's protocol risk, or it's, even if the LSD contract has an issue, right? The idea of diversification of risk across multiple venues, it also makes a lot of sense. So I hope that the stake rate ecosystem and landscape develops like this. We've had in the Bitcoin world, in the Bitcoin mining, you've had pools rise and fall, you've had centralization concerns, and that market, I think, has had much more changes than the ETH staking rate. And I think the ETH staking rate, because there's so many things that you can do on Ethereum, and the idea, that there's that liquidity is king. Right now, I think more people are worried about the financialization, what they can do with their liquid stake token. But I do hope that actually people start voting with their ETH, on the diversification. So, I think we share some common values in that.
And you make a great point, right? Like once you talk to sophisticated people who have maybe managed regulated products or understand like the risk they're taking or want to smoothen their volatility, like these people understand that it goes way beyond liquidity, and there's things like counterparty risk, which I didn't mention, but it's a very big one, right? And I think the risk of having just one is just too big. And yeah, looking forward to a diverse ecosystem. Then we have a question with Costis.
Yeah, so wanted to go back to a point both yourself and Darren touched upon, and this is the fact that the MEV component of the execution layer rewards is, as you suggested, a bit of a lottery. And there, what we have observed as we're analyzing already at the epoch level the rewards that different liquid staking derivative providers are offering. So let's say we saw Lido versus Rocket Pool there. It seems that something like Rocket Pool that has a smaller footprint, if I may use the term, on the network, the impact of a juicier block in terms of MEV is a lot higher, but also we have a bit of the sense that they tend to get statistically less of these blocks, which over time has a negative impact, it seems, on the yield they're delivering. So first of all, happy to hear your thoughts on that. If our feeling is accurate there, or is it just performance of validators? And also, if this is a case, what does it mean in terms of competition between different providers? Meaning, does Lido having at the moment the lion's share in a way have an unfair advantage compared to others in terms of the execution layer rewards it distributes, or we should not be thinking about it in that sense, in that way? Thank you.
Yeah, that's a very good question, and the answer is not simple. I'll try to simplify it. So there's two things mainly that are going to determine, maybe three things that are going to determine your rewards. One is, what's the performance of your servers? So if you're using professional servers or DVT, your performance is going to be very high, usually 99.9 or even more, because when something fails, you have like either very good backup, like a very good architecture, or something built into it, like Diva's DVT. So I think in the future, we're going to see solutions that maybe not today, because some solutions have like a lot of home stakers and maybe less professional operators, but the sector is becoming professionalized very quickly. And the solutions are helping too in the technology. So I think performance will not be an issue, like will not be a differentiator in the future. The second thing is MEV. MEV, for those who don't understand it, is when you get a block, sometimes that block contains a lot of extra value because of the way you can reorganize transactions. So sometimes you build a block and you will get a much higher reward. And this is a little bit like a lottery ticket. Like if you're lucky, you will get it. this is a statistical effect. And if you keep playing, usually you will get the same amount. So typically it shouldn't matter. But what happens is some players, because of how they're regulated, they cannot accept every block. So sometimes they need to exclude certain blocks because maybe they contain something that they don't like, or that is censored, or that they're subject to sanctions. So sometimes there could be a variability there, and that might be an opportunity to capture differences in rates, or maybe to try to trade that. But typically, it shouldn't be this way. But I think the reality will be that some people will have slightly bigger performance, and it's a choice. It's not so much that they're better or that they're bigger. It's more a choice that they make of what kind of MEV they work with. And the last thing is, when you're very, very small and you're playing the lottery, you have very noisy returns because you either win the lottery or you don't. But when you're bigger, and I'm talking maybe 100 million plus in TVL, it typically doesn't matter because you're big enough that things even out. You win, you lose the same amount of times, and that doesn't matter. So all in all, I think the main difference here is going to be regulation. If somebody is regulated very heavily, maybe their yield drops a bit, or if somebody is like trying to maximize for yield, and they're less regulated for whatever reason, that might make a difference. But I think that over time, probably distance will not be very significant.
No, excellent. Thanks very much, Pablo. Thank you.
And I think Lucas had some technical questions, specifically about Diva. Is that right?
Well, I would probably need to dive deeper in the documentation. I'm just curious. When we look at Lido and how they account for the rewards, I wonder, how does the Diva compare to that? Like, how do you manage, from a technical perspective, the rewards, the slashings, the validators? How's that work actually on Diva?
Very, very similar. I keep liking this analogy of a big group of people working together. And the only difference is that in Lido, those people are kind of like private companies that they hired, and they said, you're going to do all this job. In Diva is individual nodes, which are permissionless. They run a node, and they connect to the network, and kind of the software does it for them. So they do the same things in the end. A professional and a home staker do the same things in Diva than in Lido. So the rewards come from the same places and are practically the same.
So you also have like the pool of ETH that gets distributed to the validators, and then the validators accrue rewards, and then every day you count the rewards, account for the balances of each validator, I guess.
That's right.
In case of any slashing, and then you, every 24 hours you rebalance your token, or?
That's right, yeah. So every day there's many kinds of rewards, but that doesn't matter really. It's just like a company can make money from many things, but it really doesn't matter. All the money at the end of the day gets counted, and it's like, okay, how much do we have? And that belongs to everybody, like to the stakers and to the operators. The operators get paid a little bit more just because they're doing extra work. But apart from that, it's completely socialized. And if there was, for any reason, and this is the same in Lido, by the way, if there was any kind of slashing that would cause a loss of funds, that would also be socialized with everybody. So the idea is that everybody works together. These things practically never happen. Disaster scenarios are very, very unlikely. So typically what you see is something very predictable, very boring, that simply keeps crawling up.
So, Diva is, still fairly small, but are you thinking about any MEV integration? Like, Lido has, they encourage the validator operators to, to have that integration on. How do you look at it, that kind of revenue stream?
MEV is now part of staking, everybody's doing it. So in every sense, it's just another revenue stream from staking. It's still not decided how exactly the relayers will be chosen. Because in MEV, you have to select who you work with, and there's maybe like 10, 20 entities. So it will probably be the DAO that makes a decision of, hey, these are good ones, these are not good for whatever reason. But that part hasn't been finalized. What you can expect is it will probably look very similar because in the end, we are doing similar things. We want to work with reliable, reputable sources. And in the end, it's going to be very similar.
One final question. So when we, for example, compare Lido and Rocket Pool, they have slightly different approach to, evaluating the state of the network. So whereas in Lido, everything is in smart contracts. It's kind of ready, calculated. All the calculations are in smart contracts. Rocket Pool kind of requires you to run those calculations yourself. What's your leaning towards the,
So I guess you're referring to the reward calculations, right?
Yes.
Are you referring to the token or to the way the proofs are generated, like
the
reward updates? The token. So Rocket Pool has only a non-rebasing token. A non-rebasing token is a little bit like when you buy 1 unit of Apple, and over time that price goes up or down. Lido also has a non-rebasing token, but apart it has a rebasing token, which when you hold one, it kind of grows in your wallet. So you have more of it in your wallet. So Diva will have both, just to give options to everybody. A lot of people prefer rebasing because it's simpler, but some other people prefer non-rebasing because it's better for taxes. So Diva will simply provide both options, and you can choose.
Okay, maybe my question wasn't very clear. I wanted to really ask about, like, if we want to, run the check on your validators, right? If you want to evaluate how much each validator is getting, like how much work do you actually have to do, right?
Okay, so we call that component the Oracle. In some protocols, the Oracle is centralized. So either one party does it, or maybe 3 or 5, and they vote. But the problem is you can't really do that with something that has billions and billions of dollars. So Diva is pioneering a new concept, which is zero-knowledge cryptography proofs. And what that means is there's a kind of calculation, like a cryptographic signature almost, that you can do that is without doubt like a proof that this is how much you made in one day. So that means that you don't need to trust anybody because that proof is mathematical. So it's cryptographic. It's the highest level of security you can get. Diva is probably going to be one of the first ones releasing this. We like this so much that we have actually proposed every protocol to use it. I think Lido will be adopting it too, and maybe Rocket Pool. They've been looking into it, from what I know. So hopefully this becomes a standard, because today the security that we have is really sometimes a multisig with 5 people or 7 people. So it's something that we should be like improving, I think.
No specific names, but
everybody. The problem is the technology is not there, so we just need to improve it.
So how would we? So for example, for the swaps, right? For the stake rate swaps, to be able to trade kind of the intraday volatility, what we were doing is going in and basically calculating, across a set of Lido validators, right? Is this a possibility to get, so the proofs are a way to, the zero knowledge consensus. You can know that this, like, let's say this daily print is right, but what would be a process to be able to calculate, on a higher frequency? One of the reasons is also how the stake rate swaps accrue interest and the payoffs.
I see. So the Diva token will rebase once a day, but if you wanted to anticipate and be faster than that, you could simply look at the Bitcoin chain. Those balances are available on chain. So you could build your more advanced oracles, and actually that would give you an advantage, right? Because you would be able to see what happens before it happens. So maybe there's some extra performance that you can extract, or for us as a protocol, we will update it once a day. But if somebody wants to like get the data sooner, that's totally possible.
Yeah,
It wouldn't disadvantage the user, by the way. In the end, you're holding what you're holding, you're getting the same rewards. But if you're trading on it, definitely you want to have the fastest information you can.
Yeah, I mean, this is kind of what we do for Lido for more than one reason, and I was just wondering, but maybe this is out of the scope of this meeting, and just like the interaction with your beacon chain. But I guess if model your interface on Lido, I would presume it's Lido like rather than Rocket Pool-esque.
I would think so, but this is something we should talk about. I'm super curious. This will be like kind of really detailed technical things we need to check.
All right, thanks a lot.
Super cool. Yeah, curious to talk about it.
May I ask a question for Diva?
Mm-hmm.
I wanted to ask you about providers for liquid staking. There are, quite a few right now. You have Lido, you have Swell, Rocket Pool, Stader, Anchor, Frax, and so on. And to be honest, I read most of the white papers of these projects and of their solutions. And I'm reading. Everyone is explaining how good are they and how they work. But I don't have enough technical knowledge to understand which one is it's better or worse. Probably, can you share your opinion, which liquid staking providers you think have interesting technology better than others? So any insights from your side?
Yeah, good question. There's a lot of names, but in the end, for me, there's only two distinctions. Are you trusting somebody or are you not trusting anybody? And in most protocols, what you will see, if you look, is maybe they move things around and they have a different way to do the rebasing and non-rebasing, but very, very few things matter. In the end, it's about, is it trustless and decentralized? Is it run by people that you don't need to trust? That even if somebody would try to attack it from every direction, it would be impossible. That even one government couldn't shut it down. And that would be what I called decentralized and permissionless. And another side would be permissioned. And there's also value to that because maybe you need to know who's making it. Maybe you have other products with Coinbase or whatever, and you prefer that. But in my opinion, there's only permission and permissionless. And the only two permissionless things that there are is Rocket Pool and Diva. Rocket Pool is already live. It's a very good protocol. The only issue it has is that because of the way it's designed, it's not very scalable. So they have had issues growing just because there's not enough operators who can securely run it. With Diva, the difference is very similar to Rocket Pool, but instead of using single nodes, it uses multiple nodes, which means it's much more scalable. So it's kind of like a kind of order of magnitude improvement in scalability. So in the end, both are very decentralized. I think what the good thing about Lido is it's very big, it's established, it's been around for a while. The strengths of Rocket Pool and Diva is that they're fully permissionless. And I think the reason why we're working on this is because we think it's a significant improvement that will have a lot of value in the ecosystem. But of course, that's me. I still encourage you to check each one. Maybe there's other things that are valuable to you. But I think trust should definitely be a top consideration when choosing a product.
Thank you for your answer.
Great, amazing discussion. We are right at 1 hour, so maybe last questions if we have such. Anyone wants to join the stage, or from the people who are already on stage, I guess. But it was super informative.
Mm-hmm. Yeah, thank you so much for having me.
Kostis just mentioned that it's like a it's like a master class in liquid staking derivatives. So
yeah, I'm also learning things about you guys. So really looking forward to a technical talk. Thank you so much for having me, and I want to thank you guys also for like kind of going the extra step and making sure that you're on top of everything happening, supporting decentralization, and yeah, I think Kostis might want to add something.
No, I mean, thanks again. It was great to have you. Really, I texted earlier. I sent a message on Slack to Vlad earlier saying, "Okay, this is like a masterclass on staking and LSDs." Maybe one last thing, if you can share with us a few more points on where you stand with development. Understand there is a testnet, how we can participate if someone wants already to contribute to the project or be involved. That would be interesting.
Actually, yes, and we have a question from Marcus, maybe after that, if he wants to join and ask it. But yeah, and then we can close. But please.
Cool. Do you want to go ahead, Marcus? And then I can close with... Oops,
well, he left. I think, yeah.
Right.
I don't know. He left, so please.
Well, first, thanks for the chance. If anybody... If we pique the curiosity of anybody to understand what we're doing, you can go to divastaking.com. So that's divastaking.com altogether. And what you'll find at the moment is Divas under development. You can ask questions, you can suggest things in the Discord. There is a testnet. That testnet is not for everybody. You need to be a little bit technical to run it, but if that's the kind of thing you like, you can install it, run it on your computer. It's one of the simplest to run. And that means you can try how Diva is going to work in the future. The other thing you can do is there's this vampire attack happening at the moment. It's called, quote unquote, vampire attack. It's called the Early Staker Program. And what you can do is you can deposit ETH or STETH into Diva and do this liquidity mining where you can earn Diva allocations for supporting the launch of Diva. And this is really important because when you start a protocol, if there's zero, it's very hard. Everything takes a long time. So the early staker vaults, what they are is a way to speed that up. Right now, there's $45 million in liquidity there. If you choose to deposit something, you will be eligible to earn Diva allocations. And it's everything on chain. It's using these Ensign vaults. So you will find it in divastaking.com. But apart from that, the best thing you can do is wait, keep checking, and eventually will be mainnet and you'll be able to play with it. So yeah, thanks for listening.
One last question. What Diva Staking, where does the name come from?
Good question. Diva means distributed validation, like Diva.
Okay. Yeah, I was assuming it had some technical meaning, but I just wanted to see.
Yeah, the original logo was a lipstick, but it didn't look very good for staking, so
it's nice.
we made a different one.
It's nice. I think it's quite edgy,
Yeah.
Listen, I'm gonna get those governance tokens. First proposal: bring back the lipstick.
Bring the lipstick. For sure.
All right. Thank you.
Thanks everyone.
Pablo. Thanks everyone for joining. And I promise the next Hangout, same time next week, same day, will be really also very interesting. Potentially, even one of the best ones that we've had. I mean, I think this one is currently potentially the best one, but the next one will be really, really cool. So stay tuned. I'll be announcing it tomorrow. And yeah, thanks Pablo once again. It was really amazing.
Amazing. Looking forward.
Great content, and have a great day.
Yes. You too. Bye.
Bye.
Thanksgiving.
Thank you. Bye.
Happy Thanksgiving, Darren.
Almost done with the pie.
Great. Well, relax a little bit, enjoy the pie, and yeah, and some wine, maybe. So.
Yep. Cheers.
Bye.